These are the top 5 stocks on my watch list for this upcoming week, with number 3 being my favorite setup. We are getting things started with Apple, looking and cooking at this chart that has been on a crazy uptrend all the way since January. This has been a crazy recovery, and there's room for legs to run further this week. We've got a kind of all-time high right up here at 193 and change. If we scroll back out or even go to a weekly chart, we can see that Apple is in uncharted territory, and it really has been a nuclear rise in this area right here, where it's just been boom to the moon upwards. And in order to keep this kind of momentum going, we need to see a couple things for this week. Let's go back to our daily chart and flip in. So Apple has been pretty tight to this 8-day exponential moving average, or EMA, this kind of pink line here, with a couple drop downs below, just a couple kind of blips in the road, and then there's more kind of recovery and more buying happening to drive this stock higher. What we're looking for right now is we had this kind of drop last week at the beginning of the week, Monday and Tuesday here, and now we're back above that EMA. So it's a quick drop that's been in line with everything else that's going on. Every time it's dropped below this, it has stopped out at the 20-day moving average or just around there. So it breaks through the 9, doesn't break through the 20, and it jumps back on top very quickly. So the buyers keep stepping in, meaning to me that this area right here, this drop down, it was bought back up last week at the tail end. So I think this has legs to go higher into their earnings in a couple of weeks. I'm looking for a price level right here. The top end level is 193.98. If it goes above that, you have the psychological level, of course, up at 200. There's room to run up there. If you're looking to kind of buy shares of Apple straight up, you'd want to maybe put your mark in here. We'll use the position indicator to show you. Maybe you're going to put it at market open with a kind of stopping out here at that 20-day EMA, and then you have your price targets moving up. You can kind of get it in there at the 193 or 194 level. That's a 1.7 return. If it breaks through there, you're moving higher, keep the position on. You're going into the area around that 199. If you're just looking to buy calls, a good option would be to buy calls maybe on the weekly expiry 2 weeks out, not too far out in time, because there is earnings in 2 weeks, which can chew up your profits through volatility if you are looking to buy calls. If you're looking to sell puts or sell calls, probably not the best time to sell calls in this scenario where the stock is trending upwards and in a clear up run. Selling puts, on the other hand, is a good strategy in that kind of environment. So if you're looking to sell puts, I would just buy in some buffer, maybe kind of put your kind of area down here at the 185, 186, these 2 candlesticks right there, and then move on from there as the stock continues to go. If you do have to buy the shares, if you do sell the put, it's down here at 186, 185, a little bit of buffer, and there's a lot of volatility again from earnings, so you probably make a little bit extra premium doing that. That's it for Apple. On to number 2, Google. Google's setup is interesting as well. It has been on a nice tear as of late after their last earnings. It kind of meandered into earnings and exploded afterwards after the information was digested. Had a recent kind of swing down low to the previous low right here, chose not to go down and fill this gap and bounce back up. Very strong bounce on this area as well, which you can see here. This was a very pronounced V shape or checkmark shake bounce, which is a lot of strength, and it's been coupled by some increasing volume. So the gaps are moving upwards and there's increasing volume, and there's more buyers coming to the table every trading day. This is a good, strong foundation, 3 bounce there. And then it took a little bit of a breather on Friday with a kind of pullback on Friday, showing some weakness there. We can see similar candles right at this level here, and again, a little bit beyond that right there. So if there is legs for this one, I like to see the kind of candles step up and kind of go back into the buying mode on Monday. I could expect some topping out, some selling pressure into this area. So if I'm going to kind of get into my position, if I'm buying shares straight up, I'm looking to buy kind of at this next kind of previous day's high in the close there at 124 and change. That would be kind of my entry area. And I'm okay with entering there because there was a nice spike in volume and it was that close price. So if it gets down to that level again, you see it touched it there in the last trading day, that's a good area for me. If it holds there, I'd probably go long on that position and then kind of have a buffer into the upside here where it maybe kind of tops out right around that 127 again. A quick 1 to 2 day play on this one for me, because there is some potential signs of weakness given this candle was a rejection candle, even though the trend overall is upward, and there's a nice crossover here on the stochastics as well. So if you're going to go long and you want to buy calls, probably not the right environment to buy calls on Google right now. It'd take a big kind of catalyst, and their earnings call coming up might do that there on the 25th to push it past its all-time highs. If we zoom out a little bit, all recent highs, not all-time highs, recent highs, all-time highs getting back to 152 and change. So to push past this, it's going to need a little bit of a boost, probably around earnings. If it does, if they do well, I can see it kind of moving up there and legging up. But for this kind of trading week, I'm looking for a more kind of small directional play. If it does show some kind of pullback, but it holds there, if we get into like the 1 hour, 15-minute trade, I'd look to kind of see where it's going to break through and break and hold this level right here. Again, 124 and change. If it breaks down below this 8-day EMA on the 1 hour or the 15-minute chart even. If we break it down some more, you can see that it's kind of hugged this a little bit. It's kind of flipped all over it. I want to keep this above this line as we go on every single chart to move higher. If it does that, it's setting up well for a bullish move. If not, you could look to go a little bit more bearish and take a short position, or you could look to buy some puts and take an options trade on there. Again, understanding that volatility is going to be greatly impacting things this coming week and the week after with earnings right around the corner. On to number 3 in my favorite trading setup for this week. This is what I think is going to be a very strong position. I'm waiting for one signal and one signal only on Netflix. We are waiting for this next bar to cross below this 8-day EMA. It is right on the cusp. We have maxed out our kind of recent bull run. They had a good perk up after the last earnings performance. It kind of jettisoned and went into nuclear kind of mode as well. And earnings are right around the corner again. So there's some volatility here, but I think this is one where it could potentially drop back down. There's another level right here where we've seen that it is previous kind of resistance or a ceiling at 485. If it does in fact start breaking down, and this is a kind of big red candle, it tried to go higher and it didn't make it. There's some adding volume as well. So there's some kind of people looking and getting eyes on Netflix. And if this does drop through here, again, I'm looking for the drop below the 8-day EMA. If it closes below that on Monday, I think it's got room to run lower with the potential even down here at 424, even down here at 416. Then if it gets real nasty with earnings coming up, maybe even titles onto 410 or below that, fills this gap in here and moves its way down even that 380 line, whether it be the next kind of couple legs further. So we could draw those in if you want. 427. We talked about this level right here, and then one more down here, let's say right here to fill that gap in, and then one more down here. Those are kind of the areas where you're looking to get kind of catching the support on the downwards play. But this would be a good stock, in my opinion, if this does happen, if this does kind of come through here, and we do get that candle right in here, right, where it's just boom, best candle you've ever seen right there for the downside. And we're going to move lower from there. And hopefully, if you're taking a bearish position, you're going to be either buying puts or just going short on the stock. Or if you have a position right now in Netflix and you want to sell it off and then buy it back at a cheaper position and get back into your trade, that would be my kind of way to play this if this does break and this candlestick does come to fruition. Popping into Airbnb, we've got a nice, super strong setup moving forward. We have a nice rip since May. It's just been top end heavy with a nice big move here. There was some analyst kind of ratings, changing the ratings on Airbnb, right? And we're looking to run up and just get into earnings again, a couple weeks away still. So there's a room to run. Yes, there is, but we're also looking out for this kind of rejection point right here, right at that 140, 144 area. This is a strong potential rejection point based on the amount of volume that was there last time and the long wick there that where it didn't get through that level. So we need to get that push through there. I'm expecting this to kind of hit that area. And if it does break through and go to the upside through here, like if it does kind of go up, come back down and retest it and then move higher, you're in going bullish. You're buying calls, you're buying shares. If it doesn't hit this, if it hits it and doesn't break through and kind of bounces back down, then you're looking to make a kind of play that's directional based on a bearish sentiment. And you're looking to kind of get back down into it right around that level at the EMA, maybe dropping down to 135 and change from the 143 current level where it's currently trading at. Two ways this one could go. Again, it's going to really depend, I think, on that 144 level. It's going to break above or break below. And if it doesn't break above, it's going to kind of trickle its way back down and kind of wait for more power and more energy from this earnings date there on Thursday, August the 10th. And last but not least, everyone's favorite, Tesla. Tesla's got a really interesting chart here for those who want to go bullish. There is a strong uptrend again in this stock. It pulled back down here to the 20-day EMA. It did it again, kind of flirted with dropping below the 8-day, and then it kind of did, but then bounced right back up again. We've got increasing volume as well from this recent decline in volume. It's building back up into earnings. That is the key day there. Wednesday, July 19th is the earnings day coming up this week. So a lot of impact will be done on that day and leading into that day. And then you'll have the area kind of after that area where it's going to fill out. And I'm assuming, my assumption is that because of the delivery that we had for Tesla's vehicles, that was very positive, we're going to get a nice kind of pop in this stock. I don't think it's going to be a long-term thing. I think it's going to be one of those pops where it kind of jumps up here. People go, it's good news, it reacts kind of up here, and then it kind of falls back to like a shooting type of star and kind of falls back down in this level. But this area where it's at right now, where it's kind of topping out, I think that's your new kind of down level support at 282. I think it pops after earnings and then kind of fades back down, and people kind of sell and take some profit on Tesla because it has had such a good run up leading into this kind of period. Because there's earnings, there's a lot of volatility in the market. So buying puts and calls, potentially if you're going directional, if you're buying calls, just understand what volatility means. And volatility crush is a big factor when buying calls this close to earnings date. If the stock doesn't move in your direction, you can get crushed by just that, the price action, and then the volatility on top of that. And if it does move, if you pick the wrong strike price, the volatility crush can still wipe out your position. You think you're going up in value because the stock price is going up, but there was too much volatility IV banked into your trade, so it's not going to work out. So understand what volatility is going to do around Tesla, around earnings, and then make your decision based on that. It's also good practice to look at what the bond rates have been doing lately, and they've all been kind of tweaking upwards on Friday's trading session. They pulled back down. When the bond rates pull down, the market usually does pretty well. When they tend to skirt back up is when the market kind of tries to sell off and then injects some more volatility into itself. So if the bond yields are raising, just have an eye on those as well, the 20 to 15 to 10, all those different bond yields going up and down, understand what they're doing in the market. And volatility can be a huge advantage in this kind of time. The VIX as well can be interesting to monitor. And overall, volatility can play a huge role in your trading, but only if you know what to look for. So to understand how to trade it and the key points that every trader should know, like this video and check this out.